coming in from the RBI. In its bulletin, the RBI has said that risks are increasingly tilted towards darkening global outlook. Very interesting commentary coming in from the RBI, which puts out a monthly bulletin. But this is coming at a juncture as the last one this year that will come out, and looking at a new year which is quite uncertain. So what the Reserve Bank says in this bulletin is that India's near-term growth outlook will be supported by local drivers. So that's the big plus. They also say that global inflation may have peaked. That's a key input coming there from the RBI. Indian economy is seeing an upturn in its capex cycle, and Indian federal state finances have improved significantly in the first half of the year. Inflation, on the other hand, is broadened, especially at its core, and capital expenditure of Indian states has remained weak. So these are some of the points of view coming in from the RBI bulletin. But like I said, the juncture at which it's coming is interesting. Siddharth Sanyal, Chief Economist, Bandhan Bank, with me now for more on this. Siddharth, what is your reading from the RBI bulletin, especially on what kind of a year we're looking out? What stood out for me is a reiteration of the belief that inflation has peaked.
That's correct. That has been our anticipation also for a while. And from a broader macro point of view, also that's not too surprising. If you see over the course of the last several months, the momentum in global growth and prospects of momentum going ahead in 2023 seems to be tapering down a bit. And also the pace of rate hikes in a large number of countries, including in the US and some of the other major countries, had been phenomenal and almost unprecedented, I would say. And we haven't seen this kind of hikes in the recent past. So overall, that will be likely having some kind of a dampening effect on the overall growth recovery. But the positive side is that will possibly help us gaining better control on inflation.
In this point of view of India relative to the world, where do you see that positioning, going forward? We'll still be plagued by inflation. We're seeing capex not at the best possible situation, but the overall narrative seems to continue that India is relatively better off.
I do completely agree with that. And to appreciate that particular view, we possibly would have to take a step back and see the broader fundamentals of the characteristics of the economy. And if you try to see that, you will find that India, I'll not call it decoupled, but at the same time, India's linkage or dependence on the global economy is relatively less compared to some of its peers. Number two is, another way of telling it is the domestic economy is pretty large, and there are multiple drivers, not one driver. It's not consumption only, it's not investment only, it's not export only, or rather some kind of a balanced, large, balanced economy, large economy, and less dependence on global economy possibly gives India some kind of a buffer that is not really present today with a lot of countries. Also, I think one particular factor remains very critical going ahead in the near term over the course of the next possibly 3 months, the rising discussion or the rising cases of COVID again in certain parts of the globe, particularly in case of China. I think how exactly that plays out, that will have a lot of bearing on the region, including on India. But generally, my sense is that India, as you rightly mentioned,
tell me a bit more about the China factor. We spoke about it earlier in the show, Mr. Sanyal, and the catch-22 there seems to be that if China reverts to restrictions as a means to deal with the surge in infections, that's bad news. The infections growing in themselves is bad news. So do you think that this is going to be a pain point at least for the next 3 to 4 months?
It can potentially be. Yeah. The reason being, as you correctly indicated, that if I again take a step back, what exactly China means to the global economy, that it consumes a lot of raw material, but at the same time it produces it at a scale and produces at a cheap cost. So if China slows down, if China closes down and slows down over the course of the next 2 to 3 months, 4 months, that means the momentum of recovery in the global economy will be significantly impaired in the near term. At the same time, the cheap source of cheap manufacturing will also be relatively restricted. That's why that particular zone will be taken up by some of the other countries, but cost of manufacturing there might be slightly higher. The positive side of the overall, in a very convoluted way, though, might be that the commodity prices might cool off a bit because of this particular factor, and on balance, India might actually, I mean, in paucity of some better word, I would say India will enjoy one more buffer from the commodity price angle, but at the same time, not without a lot of complications because of the weaker production momentum from China and weaker global recovery.
Thank you so much, Siddharth Sanyal, for speaking with us.